It is my belief that crypto index funds have the potential to be one of the hottest narratives in the space during the next crypto bull run. And the projects building these products, I believe, could be the next wave of tokens to do it 10x, 50x, or 100x asterisk during the next crypto bull cycle. I'm not saying that that's going to happen overnight. I'm saying during the next crypto bull cycle, if crypto index funds really take off, then these projects that are building these products, because of the revenue that they can actually generate from these index funds, I believe have a lot of potential to grow. And they're really small today. I think in the future, where these things take off, they could be really massive. So in this video, I'm going to dive into the top crypto index fund projects, my thoughts on this sector, which project I'm the most bullish on, and exactly why I believe that crypto index funds have the potential to be the killer narrative next bull cycle. So what exactly are crypto index funds? Well, they're exactly what they sound like, an index fund of crypto assets on chain. Imagine if instead of having to do all the research on all these individual projects you want to invest into, having to learn how to bridge over funds and use all these multiple different dexes across multiple different chains, imagine if instead you could invest into a single token that gave you exposure to a basket of different crypto assets. By buying something like the DPIN index, you could, with the click of a button, gain exposure to a basket of assets, including things like Akash, storage, Filecoin, and more, making it super simple for the average person with very little crypto on-chain experience to jump into the space and capture some of the upside value based around, whatever popular narrative they were interested in investing into. Think about how last bull run, the metaverse was the popular narrative, right? The metaverse got so hyped that, at one point Facebook changed their name to Meta. Everyone was like, oh, the metaverse is going to be the next multi-trillion-dollar sector. Zuckerberg was like, I'm dedicating all of Facebook's resources, trillions of dollars. We're going to spend this on the metaverse. We're going all in. And, the metaverse was people were foaming at the mouth to get into metaverse type, assets, especially in the crypto space. But it was really difficult for the average person that was, wanting to invest into some sort of crypto project involved with the metaverse to invest in a decent project that was doing something in that space. It would have been much easier for them to just buy a metaverse index of crypto assets. This is the kind of thing that we need, in my opinion, to massively grow the crypto space. That's because people are lazy. They don't want to go through and learn how to do all this complicated stuff on chain. And I get over time, this stuff will become easier. Wallets will become better. All this will become more and more intuitive. But it's never going to get easier to go and research all of these projects. It's never going to get easier to understand some of the metrics behind these projects. I mean, maybe people will become more familiar with them, but it's still going to be insanely difficult for the average person. And they're going to end up investing into really bad ideas. Even me, last cycle, I felt like a lot more experience than the average person investing in crypto. And even I ended up investing into some really dumb things, making some really stupid mistakes because I hadn't at that point taken the time to understand the technology behind some of these things. A lot of times people just end up buying projects based on buzzwords. The website will say metaverse, blah, blah, AI, blah, 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 cryptographic, blockchain, bonanza, come buy us. It takes a certain level of sophistication, discernment, and just research to understand which projects are valuable and which ones aren't. And an index fund massively simplifies that process by putting a team of people behind that index that actually do know what they're doing. They're going to make better judgment calls than maybe the average person, allowing these people to get decent, relatively safe exposure to these assets without, risking everything they have. I think really what the average person wants is they just want to make money if crypto goes up in value. They're like, oh, crypto's going up. Metaverse cryptos are going up. I want to make money if metaverse cryptos go up because I think they're going to keep going up. Boom, basket of crypto metaverse assets. I now hold that. If those go up, I'm going to make money. If they don't, I guess they'll lose money. But you get the idea. They're placing their bets. I think they're pretty solid on that. What they don't want to do is invest into some really stupid project, not knowing it's a stupid project, and they get rugged or they get hacked or, they have to swap their tokens and they're too late and they miss it and they lose all their money. That kind of stuff freaks people out. And I think it holds back a lot of people from investing. And traditional index funds are about $11 trillion in size, which is pretty dang massive. The entire crypto market is $1 trillion. All of crypto, $1 trillion. Traditional index funds, $11 trillion. That's huge. It accounts for about 25% of the total stock market. 25% of the stock market means the index funds have grown to be insanely popular. It turns out in the stock market, people also don't want to do research and they'd rather just invest in the S&P 500 index and just have all this stuff managed by somebody else who knows what they're doing. And if crypto index funds were to grow to be the same, they were to grow to be 25% of the total, market of crypto, they would account for about $302 billion worth of crypto assets at today's 1 trillion total market cap prices. Meaning if they had like an average annual fee of about 1% on those assets under management, they would be making around $8 billion annually in revenue. And again, that's at today's prices. At the height of the bull market, the total crypto market cap was sitting at around $3 trillion. And I believe that the total crypto market cap is going to go way higher than that in the coming years. But just at those levels, at $3 trillion in market cap size, if crypto index funds were to capture 25% of the market, they'd be doing around $36 billion annually in fees at a 1% annual fee. And if the entire crypto market cap were to ever just reach the market cap of gold, then those index funds would be doing around $100 billion annually in fees. It honestly shocks me that this doesn't already exist. It seems like one of the most obvious and most lucrative plays in all of crypto. Right now, most of these crypto index fund projects are really, really tiny. Some are under $10 million in market cap. And with the potential for growth like we talked about earlier, it wouldn't shock me if some of these crypto index fund projects gained massive adoption over the coming years. They reached as high as $50 billion to $100 billion in market cap. And going from $10 million in market cap to $100 billion in market cap would mean every $1,000 invested would be worth around $10 million. That is some insane upside potential. And obviously we don't know that that'll happen. We don't know that it for sure will hit those levels, and that could take years, or it could not even happen at all. But I think there's some potential here, and because of that, I'm allocating a decent chunk of capital towards crypto index fund projects for the next bull cycle. And I do have a favorite crypto index fund project, which I will share later in this video. However, obviously, none of this is investment advice. None of this is me telling you to invest in any of these things. You can always lose 100% of what you invest into crypto, and you should always do your own research and not just blindly copy random people on YouTube. Be a grown adult. Gosh, take some responsibility for your actions. If you're not a grown adult who can take responsibility for their own actions and actually put in the work to be successful at these things, then you probably shouldn't be watching this video. You should probably click off this and go find some cute kitten video, or maybe some video where some dude lights a dump truck on fire to see what happens. That's more your kind of vein of what you should be paying attention to because you're lazy, okay? This is not for lazy people to be investing in crypto. Lazy people that invest into crypto end up losing all their money. First up is Index Coupe. At least that's what I call it. It could also be Index Co-op. I've actually never really understood, if it was Index Coupe or Index Co-op, but for the purpose of this video, I'm gonna call it Index Coupe. Index Coupe is the index fund project I'm the most bullish on. They are exactly what I described earlier, index funds on chain. And they already have a range of different index products available, including the DeFi Pulse Index, which aims to track the performance of the largest protocols in DeFi. And just because I know people are dumb and like to always post sponsored in the comment. This video is not sponsored. None of these people paid me to talk about them. I'd never do any sponsored videos on YouTube. I never have done any sponsored videos on YouTube. This is just my personal, genuine opinion on these projects. Although I will say I do obviously hold index tokens. Anyway, so they have an index called the DeFi Pulse Index, which aims to track the performance of the largest protocols in DeFi. Basically, imagine someone who's heard about DeFi, wants to invest, but doesn't have the technical expertise and everything to know exactly what projects to buy. So instead, they buy something like the DeFi Pulse Index. By buying this index, they get exposure to assets like Maker, Uniswap, Aave, Lido, Synthetics, Rocket Pool, ETH, and more, with the allocations for those assets being expertly balanced by the actual team creating this index. So they currently have bigger positions in things like Maker and Uniswap, and they have smaller positions in things like Balancer and Rocket Pool. The index is balanced every quarter and updated, ensuring that you're always exposed to the optimal assets for this fund. And I actually personally own the DeFi Index Fund token myself, all without you having to understand all these complex concepts and how they all work. The fee the protocol captures on this index is 0.95%, so just about 1% fee, like I mentioned, earlier in my earlier example, like imagine if they had a 1% fee. Well, they have just about a 1% fee, which goes to the index Coupe Treasury. They also have other indexes like the Diversified Staked ETH Index, which is an index of various liquid staking tokens for staked ETH. This is actually incredibly useful. If you're somebody that stakes ETH, sometimes you're a little bit nervous that whatever platform you're staking on could get have some sort of smart contract error or something. So when you're staking a lot of money on there, it kind of freaks you out. You can instead get this token, you get all the staking yield, but it's coming from like 5 different staking providers. So if one of them went down, yeah, you lose 1/5 of your capital, but you save the other 4/5 of your capital. So that's a great index for people that are wanting to diversify their risk. They also just launched a large cap index of the top 10 crypto assets by market cap, excluding stablecoins. Now, currently they have a market cap of around 8.9 million for their index token, which is the ticker index, and around 5.5 million in stable assets in their treasury, not including their index holdings. So when they account for their treasury holdings of 5.5 million, they're not talking about their own token. They're not like FTX here being like, look at our budget, look at our balance sheet, it's massive. Look at all this money we have, and it's all like their own illiquid token. No, these are stable, 5.5 million in stable coins. Their index tokens are separate. They could also sell those for capital if they needed to, but those are accounted separately. Currently, index tokens are super liquid. They're easy to buy. They're listed currently on major exchanges like Coinbase. So you can just buy this thing on Coinbase. And they have some juicy new products on the way, some new index products, because they have other ones besides the ones I mentioned. They have like a metaverse index. Maybe I did mention that. Well, they have a metaverse index. They have a bunch of other indexes they already have, but they got some juicy new ones on the way, including a CoinDesk ETH trend index, which I don't know what CoinDesk's ETH trend is, but whatever indicator that is, it's based around that. As well as there's an upcoming Treasury bill index, which provides diversified exposure to on-chain T-bills. If you don't know what T-bills are, they're basically the thing sucking the liquidity out of everything right now. Basically, it's risk-free short-term government debt. I say risk-free, I guess. If you think the government's going to collapse, it's not risk-free. But outside of the government defaulting on their debt, it's risk-free, like 5-point-something% interest that you can make buying these short-term T-bills. Might not sound exciting for the average person, but imagine you got millions of dollars, you want to keep it safe, and you're like, oh, I can risk-free earn 5% in government T-bills. That's amazing. So they're taking their money out of stocks, they're taking their money out of crypto, and they're taking the money out of their bank. They're sticking their money into T-bills and other treasuries so they can earn this interest. And if you think about it from like a traditional stock market view, like you can earn 8 to 10%, but there's a lot of risk. Maybe the stock market collapses over the next year. Maybe we have a major recession, or you can for sure earn 5%, 5-point-something% risk-free. It doesn't matter if the stock market collapses. Makes a lot of sense that a lot of these different people that have a lot of money are going to move it over into treasuries and T-bills. You get the general concept. T-bills, pretty popular right now. And I think this product that Index is making could be an insanely popular product based on how popular treasuries are at the current moment. They also have a real world assets index coming, as well as some other stuff in the works. All right, so now you get the general gist of why I'm so pumped about Index as an index fund product on chain. Let's talk about some price predictions here. And this is literally just for fun because I know you want to hear it. I know you want to know how high I think this price can go. But also keep in mind, I actually can't tell the future. I'm more making an educated guess on every individual piece of information I have, but there's no way I can actually accurately predict the future. Okay, disclaimer, but I will tell you my price predictions. Scenario 1, let's assume we get mediocre results. I'm wrong. In this next cycle, index funds do not take off, but they end up kind of staying pretty niche like they are right now. Well, in that outcome, I would say we see Index hit around $50 to $100 million in market cap. So currently they're like 8.9 million. I'd say they go up to around 50 to 100 million. You might say that I'm ridiculous for saying that, but you know what? Let me tell you what's ridiculous. Crypto is ridiculous. I'm gonna read off some of the different tokens that hit 50 million to 100 million last cycle. Burger Swap, 71 million. ABBC Coin, 96 million. Polychain Monsters, 49 million. Monster Infinite, 54 million. Crust Network, 54 million. ADA Pad, 95 million. Thunder Token, 100 million. BSC Pad, 113 million. And I could literally name hundreds more tokens you've literally never heard of that hit within the price range of 50 million to 100 million during the last cycle. And not one of those tokens is listed on Coinbase like Index is. So mediocre scenario, I think Index could maybe hit a 6 to 12x, which is great. That's not bad at all. That means I got $1,000, now I have 6,000 or 12,000 or somewhere in between. That's a great scenario. That's a win in my book. Scenario 2, index funds start to become a thing next cycle, but never really reach their full potential. In this scenario, I think we see index hit $1 to $5 billion in market cap. And if you're wondering to yourself, what other projects might have hit $1 to $5 billion in market cap during the last cycle, I'm gonna tell you right now. We had things like SafeMoon, Ucash with a capital U in the middle, Bitcoin Gold, Bitcoin SV, Bitcoin Cash ABC, and a lot of really other dumb projects that hit between 1 billion and 5 billion in market cap. And if index were to hit between 1 billion and 5 billion in market cap, that would turn every $1,000 invested into $112,000 to $500,000. Scenario number 3, index funds absolutely take off during the next bull cycle, and they see widespread adoption and use. In this scenario, I think we could see index hit between 10 billion and 30 billion in total market cap. That would put it in league with things last cycle like Cardano, Terra Luna, Polkadot, Doge, Shiba, Crypto.com coin, Uniswap, Litecoin, Chainlink, Near, etc. Turning every $1,000 invested into $1 million to $3 million. Now, out of the various outcomes that are possible, scenario 1, 2, or 3, I genuinely don't care what happens. I don't care if it's scenario 1 or scenario 3. Obviously, I'd be happier for scenario 3, but like my investment thesis isn't built around it being, oh, it's for sure gonna hit scenario 3. It's built around it hitting any one of those. Because if it hits the low end of the spectrum, I win. If it hits the high end of the spectrum, I win really, really big. Either I have 6,000 or I have $3 million. But either way, I have more money than what I started with. My personal gut take is I think index funds in crypto are inevitable, but I have trouble saying like for sure that they're gonna take off next cycle. I honestly don't know. It definitely seems possible, but honestly, it's anyone's guess. Sometimes these things take longer than you expect them to. Okay, so that's my number 1 pick, but there's a few others that I think are extremely compelling as well. Second runner-up would be a project called Enzyme. It's a much more DeFi feeling protocol, and it's got over $100 million in assets under management currently. And the way that Enzyme works is via something called vaults. Where Index Coupe has its funds professionally managed, Enzyme's vaults can be created by anyone. The asset manager who creates the vault is incentivized to do the best job possible because they actually get a cut of the fees of however many assets they have under management. And obviously people want to deposit their funds in the best performing vault. And the vaults can use a range of different strategy. You can do just a simple buy and hold in the way that we're talking about with index, where you have a basket of assets, they buy them and they hold them. Or you can actually have assets in these vaults, yield farming and doing all these complex strategies. Or you can do a mix of both. You could have some assets that are just buy and hold in the vault, and you can have other assets in the vault that are doing some sort of yield strategy, or maybe they're being staked so that they can get their full account of yield. And I really like the way that they approach this because it's very different than the way that index approaches things. Index, again, is professionally managed. So you have like this almost assurance like, oh, I'm investing into this fund that I know is managed by professionals. And that's like maybe the strength of index is it's very curated. On the other end of the spectrum, Enzyme is not very curated, right? Like anyone could create these vaults. You don't know that this person is or isn't a professional, but there is sort of this social proof as like the best vaults that have been around for a long time. They have the ability to show that like over, a year, it's gained this much. And it's time proven that this asset manager has done a good job. The benefit to this system I see is that you have a lot more experiments going on. You have a lot more people coming in and giving their ideas on what various indexes the market wants to see and managing them different. And so ideally, the best idea should rise to the top, and that should give a lot of product market fit. And as you can see, their assets under management has been slowly climbing over time. So I think both ideas are great ideas. They're completely different approaches. I want to hold both. I want to exposure both because I really don't know which one at the end of the day will end up winning. The token for Enzyme is the MLN token, which sits at just 35 million in market cap. It also is highly liquid and easy to buy, and it can be bought on Coinbase. After MLN is StFX. This platform is similar in some ways to MLN. You have vaults users create, and other users can invest into those vaults. I think a key difference is the funds are used for a trade, not as an index fund per se. The market cap for this token is slightly smaller than MLN at $34 million. I really like the concept, but really it's more of a hybrid index product with, SocialFi elements. Maybe rather than comparing this to something like an index fund on chain, it would make more sense to compare it to something like a mutual fund on chain or something like that. So for me, although I really like the idea and it's something I'm keeping an eye on, it's not something I'm currently investing into. After that is Hedge. This is again more of a vaults oriented approach, pretty much in line with Enzyme. It's like really similar to how Enzyme functions. The market cap for this token is just 10 million, so pretty small, but it also has only about 22 million in assets locked on the platform. The token for this platform is DHT, and it's used for governance. It can accrue emissions via staking and has a treasury connected to the DAO, which currently holds about 8 million, excluding the DHT token. I haven't currently bought this one, but I'm definitely interested. Last up is a super tiny one called Future, but spelled with a PH instead of an F. They're at just 320,000 in market cap. So when I say super tiny, I mean like tinier than anything I think I've ever invested in ever. They're also pretty dang illiquid and difficult to buy currently. They seem more in line with index Coupe. In fact, their DeFi index is very similar to index Coupe's DeFi index. They seem to be releasing some sort of 2.0 vision soon, allowing for cross-chain index funds. But projects this small kind of scare me in the bear market. I'm just concerned about how they keep the lights on. With so little crypto revenue to currently go around, with so little assets under management, where do they get the funds to keep funding this project and development? And how do they win when these other projects are so well funded? It's possible that they've raised money and they actually are totally funded. I don't know. But that would be one detail I'd kind of want to know before I decided to invest, which I currently haven't decided to invest in this project yet. And that's it. If you have any questions or anything I missed, let me know in the comments. If this video is helpful, make sure to hit that like button. And if you want to see more videos like this, make sure to hit the subscribe button and the little bell next to it to be notified each time I release a video. Thanks for watching, and I'll see you next week.